You see a stock price that's just soaring, and it's easy to think, wow, that company is crushing it. But is it really? To see what's actually going on under the hood, you have to look at its financials. So today, we're going to decode one of the most powerful tools for understanding a company's real performance, the profit and loss statement. Let's get right into it.
Yeah, that's the big question, isn't it? The stock price tells you one thing, but the actual financial health, the nuts and bolts of the business, that tells a completely different story. And we're going to figure out how to read that story for ourselves.
The best way to think about it is like this. Every public company, they have to publish their own report card. It's a set of official documents that lays out exactly how they've been doing. There's no hiding, no guessing, it's all just the facts. Now, this report card, it's got three main parts. You've got the P&L, the balance sheet, and the cash flow statement. Each one tells a different crucial part of the company's financial story. For today, our whole investigation is going to start with the most famous of the three, the profit and loss statement. Okay, so right about now, you might be thinking, oh man, do I need to be an accountant for this? And the answer is absolutely not. Think of it this way. There's the maker, that's the accountant who builds this super complex financial engine. And then there's the user. And hey, that's you. You don't need to know how to build the engine, you just need to know how to drive the car. Today, we're getting our driver's license. All right, so let's officially meet the star of our show, our key piece of evidence, the profit and loss, or as everyone calls it, the P&L statement. So what is it? Well, in simple terms, it's just a summary of all the money a company made, its revenue, and all the money it spent, its expenses, over a specific amount of time, usually a quarter or a full year. You might also hear people call it the income statement or the statement of operations. Don't worry, they all mean the exact same thing. So, what kind of clues are we looking for inside this thing? Well, the P&L tells us about the company's total sales, or its revenue. It shows us all the costs of actually running the business, things like taxes, and ultimately, it tells us how much profit is left over for each and every shareholder. Our investigation begins at the very, very top of the statement. So when you hear financial analysts talk about a company's top line, this is what they mean. They're talking about its total revenue. It is the first and arguably the biggest clue to a company's financial health. Now, to make this all real, we're not just going to talk theory. Nope, we are opening up a real case file on a real company, Amara Raja Batteries, a major manufacturer based in India. The great thing is, the principles we're going to uncover here, they apply to any company anywhere in the world. So let's see what this thing tells us. Okay, before we just dive in, let's get our bearings. First, this statement is for the fiscal year that ended in March 2014, so we'll just call that FY14. You'll also see the previous year's numbers right next to it for comparison, which is super helpful. And one last key detail for context. All the figures are in rupee crore. 1 crore is simply 10 million rupees. Let's look at the actual numbers. First up, we see sale of products. For AirBL, this is mostly batteries, and that's 3,804 crores. Right. Then from that, they subtract something called excise duty, which is basically a tax on goods they manufactured to get their net sales of 3,403 crores. And then finally, they add in a couple of smaller amounts from services and other operating revenue. And when you add all that up, you get the big, important figure for this whole section. Net revenue from operations. For FY14, that's 3,436 crores. This number is so critical because it represents the money the company made from its core business, what it's actually supposed to be doing, which is selling batteries and related services. But hang on, this is where the real detective work begins. See, the big numbers, they're just the headlines. The juicy details, the really interesting hidden clues, are almost always found in the notes section of the report. And look at this. Right next to that net revenue number, there's a little tiny number there pointing to note 17. That's our cue. That's our signal to dig a little deeper, because the notes, that's where companies give all the crucial context for their numbers. So let's dive into note 17. And when we do, we get a much clearer picture. It tells us that the product sales aren't just one big number. They're actually split between goods they made themselves and other items they just bought and resold. We also learn they sell home UPS systems, not just batteries. And that little line item, other operating revenue, turns out that's from selling scrap metal. See, these are the kinds of details that bring the numbers to life. And this brings us to a really, really important question for any investor, for anybody trying to understand a business. Is all the money a company makes equally important? The answer is a big fat no, and the P&L helps us see exactly why.
If we look closely at the P&L, we can spot two totally different income streams. First, there's the 3,436 crores from their core operations, selling batteries. But then there's this other line item called other income, which is about 45.5 crores. And this money comes from things that aren't part of their main business, like interest they earned on cash in the bank.
And here it is, the crucial takeaway. While a little other income is perfectly normal, a large amount can be a major red flag. As an investor, what you really want to see is a company that's great at its main business, not just a company that's good at earning income from its cash reserves. Here's a good rule of thumb. If other income consistently makes up more than, say, 10% of total revenue, that's a sign you need to start digging a lot deeper.
So let's just step back for a second and summarize what our investigation of the top line has really shown us.
First off, the top line is all about sales, plain and simple. Second, the revenue that comes from core operations. That is the number that truly reflects the health of the main business. Third, whatever you do, never ever skip the notes. That's where all the good stuff is. And finally, you gotta keep a close eye on other income to make sure it isn't hiding some weakness in the company's actual business. So, we've just decoded the entire income side of the P&L. We know where all the money is coming from. But you know what? That's only half the story. To find out if a company is actually profitable, we have to investigate where all that money is going. What about the costs? Well, that's a story for our next explainer.